Access to this webinar is for educational and informational purposes only. Consult a licensed broker, registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Oh, wait, hang on. Okay, back to the screen. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, or any of their respective officers, personnel, representative agents, or independent contractors are in such capacities licensed. Oh man, dude, block me off. Oh, there we go. Registered investment advisors or registered broker dealers. Nothing in today's webinar, website, or promotional material may constitute a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionscoming.com, to read and characteristics and risks of standardized options. PSW provides education and training services and meant to teach you risks and potential rewards of trading options. We have not a service that tells you what to trade. We are not implying guaranteeing any profit. As always, do not trade with money you cannot afford to lose. Past performance does not equal future results. Results discussed in this webinar are not typical and are only valid on the specific already identified date. Results may vary by access to the webinar. You agree to hold the performance from any losses you may incur as a result of the information discussed in the media identified above. By access to this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone. Which is why we're not as rich as Mark Zuckerberg. That's not fair. He sells your information to everyone. Anyway, all right, time to get this party started for real now. Oh, somebody says they've lost sound. Can somebody, all right, sorry, I keep doing this. You guys can hear and see right now? Yes or no? It is now 1 minute after somebody said I've lost the sound. Okay, so I don't know. Try restarting if you lost sound. All right, well, Greg says he can see, other people say they can hear. So I'm just going to send this note to all just in case it's a problem. And that's that. Okay. All right, so hopefully that person can come back in. He doesn't have an official login, so something's wrong with this whole thing, I think. All right, guys, fantastic. So meanwhile, since we have Thinkorswim up now, look how exciting things are. Oh, well, we were excited. Ah, that's so funny. All right, this is good. This is actually good. All right. So what happened is the Powell, what happens what we said in the morning? All right, well, look, let's lay out the day. So this morning, all week we were looking for this to happen. So this is how we've been playing the thing today. But as I said this morning, that all right. Okay, also the results of our exit classing. And then we have the Fed minutes tomorrow and the Fed speak with the financial press. Charlie, and I'm talking about the Fed, you know, this is what we were talking about in the morning. We were talking about the Feds and whatever and when it was going to happen and what we thought was going to happen. So, you know, the play was set up for a bullish thing. So I said, the Russell is already crossed, the NASDAQ will cross early next week, all those death crosses. This morning, the futures are 24,000 and possibly happen. The bullish futures going to be long into the thing. Blah, blah, blah. So we're looking to go long on a play, looking for the bounces, of course, coming back a little bit. And then Powell did at 12:05 say, well, let's see if we can get down to that. But you can see my button. I can't see my button until it goes past the thing where the webinar menu is. You guys can't see the webinar menu. So what did Powell say? Powell said this. The key thing he said is interest rates are low by historical standards and they will remain below the broad range of estimates of the level that would be neutral for the economy. All right, just below. Now, what is neutral for the economy is the question. Now, everybody's taking this to mean super, you know, that rates are going to stay where they are now. Where they are now is ridiculously low. He's not saying he's going to keep rates ridiculously, unrealistically low. He's saying he's going to bring them to a point where they're in the low end of the range. But the low end of the range is a mile up from where we are now still. So he didn't really say anything. So we got this huge, huge pop. And you see all the indexes flying higher. And I said, obviously, take the money and run on TF. Because we had called, TF was our primary long this morning. And oh, and somebody said, wait, who said that? Oh, then Alter Ego said, and this is a perfectly good question. Why do you usually recommend taking the money and running rather than moving the stop in order to whatever? Now, first of all, I don't micromanage the trade. So it's like when a trade does what I wanted it to do, I call it and say, that's that, I'm done with this trade. You can keep in it. Obviously, if we're at 1523 and we got in at 1500-ish, and you've got $1,000 profit, you can put a stop at, you can put your stop line at 1520 and wait and see what happens. Not so much with the futures; it's easier to do that. But even with options or with the futures, sometimes it's easy to sell on the way up, but you have trouble selling on the way down. Like right now, everyone's buying, so you can easily sell. Then if you wait too long, though, it can flip on you. And look what happens. So I said this to him I answered Alter at, I said if you wait for it to reverse, you may have trouble selling. 1520 was as much as I thought we'd get, and it's $1,000 per contract profit, so why not take it off the table? So what happened though? Like, so I said, wait, what did I say that to him? I said this to him right before the webinar, so that was 1250 basically. So I said that at 1250, and look what happened. Whoop, there's my plus. So here's 1249 where I said it. Right there. No, I'm sorry, 1249 right here. This is where I said it, to take the money and run, exactly at this spot. And this is what happened right after that. Down, down, down. All right, and now we're below 1520. 1520 was my goal. We hit my goal, so I'm taking it off the table. I'm taking the play off the table. But more importantly, I can't sit here and day trade the trades. I got 100 different things I'm doing. So if I say that a trade is good, and then when a trade goes past my goal, I'm going to say, we're done. That's it. We made the money we wanted to make. That doesn't mean you have to get out of the trade, but sensibly, you got to learn when enough is enough. You want to move on and look for the next opportunity. And I said the dollar might be a good option. In fact, I said to him, I said the dollar, just so you know, I'm not like making this crap up. And I said, I'm officially done with it and looking for the next opportunity, which may be the dollar at 96.85. So what happens to the dollar? Right when I said that to him, and let me put that back. If I don't put these back to normal, I get so screwed up when I try to look at them again. Here's the dollar. And see how zoom in we can go. So here we are at the same time, 1249, and it made a little bit of a bounce, but then it came back, and now it's no good. But I said 96.85. I was looking for like it to. I was looking, actually it was here when I was telling it to him. This is 1250. So I was looking for something off 96.85, and we did get a very small bounce, but then it failed. So it wasn't really a good play. But the point is, I was just looking for the next thing that looked likely to make a move for me. And look at copper goes flying. That's also flying because people think that China and U.S. are going to make a trade agreement. Silver popped up because the dollar dropped viciously. And by the way, remember that though, because the dollar, because of what Powell said, or the way it was interpreted, or the way it was spun, is all PR crap. That sends the dollar down now from 45 to 70 is almost 1%. So 1% drop in the dollar is going to kick the indexes up 1%. So most of these index gains are basically just from the dollar dropping. And what's really scary is oil didn't come up. You get a nice move in the commodities and stuff like that, but you're not getting any kind of real move in the oil. There's something wrong here. So what Powell said wasn't taken as generally economically bullish, and that's because what he said wasn't really much. So they're basically just taking his words out of context and trying to spin it into a market rally in order to attract more investors who go, oh my God, I'm missing out on something, as they always do. That's the way it works. Once you realize it's all bullshit, then it's a lot easier to play the game. All right. Let's see. Greg says, just tell people to Control R the page if they have an audio problem. That's interesting. I don't know what Control R does, but it apparently means something. So where were we? Okay. So what is going on? Let's see. Let's see if there's any exciting news other than the Fed. But we knew the Fed was going to be the market mover. But the real thing is China. How does the Fed make Apple go up? How does the whether or not he's going to raise interest rates a couple of percent change Apple's stock price? It really doesn't. Oh, there's Apple right there. So look at Apple when flying up to like practically 180. And what does Powell have to do with whether or not iPhones are selling? Nothing. You can say, well, if the rates are lower, maybe they'll sell more iPhones because it's cheaper to finance. That's nonsense, though. That's not it. It had nothing to do with it. They had these programs ready to go and ready to buy, and it didn't matter. It doesn't matter if the stock logically would benefit from it or not. So we'll just have to see what actually sticks. That's what's more important, whether or not we get real bounces or not. And the bounces are, I don't think I laid them out this morning, but the bounces are the same as they were yesterday. So if I find another one, let me hang on. Home, where's home? Home. So we had them all out yesterday. I think we did. Oh, there they are. So strong bounce is 25.3, and we're at, oops, YM. So we're a little shy of 25.3 in the strong bounces. Oops. And we need 27.10, 7.080, and 15.30. So we got 27.10. Nowhere near on the NASDAQ, and a little bit, and we're short of 15.30 on here. So two of our indexes are over their strong bounce lines. Oh, I'm sorry. It's a weak bounce. I'm sorry. It's a weak bounce line for the S&P. The strong bounce line, the Dow made the strong bounce line back already. Now, that's kind of significant though, because the Dow made the strong bounce line back already, and Apple is still down. That means Apple, Apple's not still down. Apple just gained a bunch of points. Apple just gained 7 points, which is 50 points on the Dow. But still, if Apple goes back another $10, that's going to add 80 more points to the Dow. So the Dow's got a lot of fuel left in it for something like Apple being down. IBM is still down. A lot of things are still down. IBM's our trade of the year, by the way. Did we discuss that at the last webinar? Because IBM is now officially our trade of the year. I don't think it made the. I don't think it made it before. I don't think it made it last week that we knew it was going to be IBM, but it's definitely IBM now. It's the trade of the year. I'm not sure what IBM did last day, so let's see. Chart. IBM. Now, well, I mean, they're back over 120. Over here, we called it the trade of the year when it was down here. I was like, I put my foot down. I was like, no way, we got to buy this thing. That's insane. It's still insane. It's still crazy low prices. Oops. So that's where we are. So now it's pulling back a little bit, but we'll see where it stabilizes. That's what matters. It doesn't matter what happens hour to hour, minute to minute. It matters where we finish at the end of the day and what holds. Because these moves are nothing. Wow, nobody has questions. Okay, I'll just ramble on about stuff then. All right, so what else is going on? So we've been watching those lines. Wait, let's get back to that. So we're watching these lines, of course. And what you want to do, once these get all green, then you're back moving into, don't forget it's only a strong bounce. We're still down. How much is a strong bounce? If a 20% retrace is a weak bounce and a 40% retrace is a strong bounce, that means this is 2% higher than the 10% drop, and these are 4% higher than the 10% drop. So it's very easy to think about where you're going to be. We're not missing anything. These are only strong bounces. If we're really recovering, you got another 6% to go to recover. You can make a fortune betting on a 6% move. A 6% move in the Dow is 300 points, is that right? No, that seems like too low. Hang on. A 6%, 10% move would be 2,500 points. So 6% move, yeah, it's a lot of points. 25,300 times 0.06 is 1,500 points at $5. So times $5 per penny per point on the contract, $8,000, 7,500 bucks. So, you know, between here and going back to where it was, wasn't that cool? Look at that. That's fun. So between here and going back to where it was, you've got $7,500 worth of movement ahead of you. So you don't have to sit there and guess what's happening between the lines, because this move is only still $1,500, but this is a $1,500 move. From 8 to 3 is 1,500 bucks. This is a move you care about, the one that's going to be $7,500 if we recover from there. So when you get good, when these all go green, then you watch to see if 2 or 3 of these go green, and then you pick up the lagger in that group. Whoever's the furthest behind, you look for them to go green and catch up. Then when these guys all turn green, you pick up the lagger and look for them to move all the way to the 6% move higher. That's going to make you thousands of dollars. That's when you bet on a bigger recovery. That's when you start changing your bigger bets, like our option bets. We don't really change the portfolio very much, other than, oh, that's a great thing to talk about today. See, I have arrived at today's topic. In some completely random way, I've now arrived at today's topic. Today's topic is find my window. Oh, I see. Look at that window. Okay, apparently I only have this one Phil Stockworld window open. So going back to, I have to move this. I have to go where the portfolio reviews are. So going back to our November portfolio review, which was roughly, most of these things were, you see in the bottom left here on my screen when I do this, it's 11:16. I can't point because if I point it goes away. It's 11. I'm pointing with my finger if it helps. So it's 11:16. So basically, you know, right on options expiration week, and Wednesday, Thursday, Friday, I try to get all these reviews done, and it gets harder and harder as they get bigger and bigger. But not the point. The point is, what do we do on November 16th? And let's take a look. Dun, 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 dun. SPX. So here we are on November 16th. That's this day right here when the market was crashing. And this day too, and these were the days. I mean, we had a down day, an up day, down day. We don't pay attention to that. We kind of ignore all that noise. But what do we do when we're down and testing the 10% line on the S&P all the way down here? What is our move? And so, and this is the point. This is the portfolio management concept of the thing. We have options. Most of the options that we have are 2-year options. So we've got plays that are designed to pay us off in 2021 for the most part. Some are shorter term, some are longer term, whatever. It doesn't really matter. Look, the coffee's doing good now. This is our options opportunity portfolio. So what do? We take advantage of the moves against us and we improve our positions. All right, now SCO, we move those down. I don't think SCO is getting any better because it's oil's been crap, but oil was really far down, so we took advantage. LB, let's take the money and run on the 20s. Those were extras. That was a different thing. OIH, we bought back the short calls. We uncovered the position. We rode our long 22s down to the 15s, and we bought an extra year. Not now. Oh my God. Pick a time. Pick a time that's much. Oh. Wait. Pick a time. Okay. Fine. Restart then. Okay. Fine. Now go away. All right, stupid windows. So what was I saying? Oh yeah. Anyway, so and not for no reason. It's because we think oil services are going to make some money because people are still going to spend money to drill for oil and such. So and also gas, of course, natural gas. So we retarget. We move the 2020-22 calls to the 2021 $15 calls. So we go from here as a target in 1 year to here as a target in 2 years. Give ourselves a lot of room for improvement. And we spend $5,600 on that. We rolled our short puts from the 23s to the 22. Well, that's all to the 22. So we still are looking for a pretty aggressive target up at 22. And of course, we're planning on selling along the way, but not now because now we're waiting for a bounce. But when we get a bounce, we'll start selling more calls and making more money back. In the short-term portfolio, these are generally bearish positions. We didn't have much to change except for SCO. In the long-term portfolio, you'll see again, let's buy 15 of the bull call spreads. We added to a short put position in KHC. In Starbucks, we took the money because the puts were up 60%. I was worried they would pull back more. And I don't know what actually happened in the end, but we're just saying what we were looking at. I'm sure Starbucks did pull back. Apple, I said we're just buying more Apple. Every time Apple goes down, we buy more Apple. We don't care if Apple becomes 20% of our portfolio. We like Apple. So whenever it's cheap, we're going to buy more Apple. ABX, we shouldn't be greedy. So we're back in our range, which I said on mid-November around here. And I said, so let's sell 20 April 13 calls. We locked in the game. We locked in this nice game that we got recently. We're locking it in by selling the 13 calls in April. And it's not that we're done with the trade. It's that if it's at 15 in April, we're just going to roll the 13 calls to a higher strike. But we don't think it's going to go blasting up into the 20s. So we're going to take some money off the table now and take $2,500. ALK on track. We don't expect them to go over 70. I was wrong. They went flying over 70. Let's sell 10 January 70 calls, so a full cover. So we basically ended our upside there and see how it goes. So far it's not going well because our net was 72.25, sorry. If they keep going higher than 72.50, we're in the money for 25,000 on the longs. And I'm happy to double down the longs as they break up. But come on, it's only an airline, which I mean, in other words, they don't make enough money to cover this bet. They could be doing well, but not so well that they're going to make the money to justify that price. So over time, it'll come back down. ARR, but anyways, I don't want to go over everyone, but you can see over and over again, we're pushing to improve the positions. Okay, every time what we're doing is when these positions are down, we don't dump out of them. We say, okay, fine, now we're going to add some more cash to the position. We're going to build it up. We're going to improve it. And by the way, adding more cash doesn't mean doubling down. You don't have to double down or anything like that because you can just roll a long call down a little lower than it was. So instead of the original amount you put in another $5 and pick up 10 in strikes. So you widen the spread and lower your strike at the same time. We do this over and over again. And if we feel that the short calls if the short calls that we sold are done with, we'll buy them back and wait for another opportunity to sell more short calls. But you got to think of it as multiple moves ahead of you, not just you're doing this one-time adjustment and that's it. All these things are just moving, up and down, back and forth. It's like a constant game of reshuffling to maximize your profitability, to make sure you're always selling good premium. And also and when you roll down, what you're doing is you're lowering the amount of premium that you bought, which is also good because it makes it a higher ratio when you sell it. So you can see the companies, obviously, if we're making bullish adjustments, then we still like the company, even though it's low. IP, LB, just let's see if there's anything exciting, but not really. Pizza, let's see here, Papa John's, and good call here. I said take 23.50 and run. Where are they? I'll show you what happened. But again, oh, there you go. That's a good example in an option of where you want to do that. Because I said take 2350 and run. Wait, I'm sorry, it wasn't at 2350. It was 2350 on the calls. Where is it? We have the 35 calls worth 2350. So it was up at like 5850 is how much that was going for. So that was right here. When it was at 5850, we were 5850. And I said, what? Take the money and run, because they're not actually worth 60. Just because you hold a stock doesn't mean it's worth more. Every time it goes up doesn't mean it's worth more, and you should hold it some more. You've got to be realistic. If you drive a Toyota Camry, it's a $30,000 car. You know it's a $30,000 car. If you bought it for $25,000, you know you got a good deal. If somebody offers you $35,000 for it, you're not going to be an idiot, I hope, and you're going to take the $35,000 and go, here, because I know I can go to a dealership, and maybe not today, and maybe not tomorrow, but I know very soon I can go to a dealership and get a Toyota Camry for $30,000 or less, because that's what they're worth. And you've got to know that about the stocks that you're buying also. Just because we're long on Papa John's doesn't mean we think it's worth infinity. It got to 58.50 and we said, oh, that's a silly price. So we sold it. We didn't get very bearish, but we basically flipped to a more bearish position. We said, take the 23.50 and run. On the calls was $47,000. I took it off the table. Cash out the shorts because I was worried it would pull back. Even though the shorts were way out of the money, I want to start flying all over the place. Where's Pisa? Here. So the short puts were 42.50 puts. I don't think it's going to go below 42.50, but we had a good profit on those. They were $7.70 when we sold them. They were down to $1.43. So why should I hold them if I think the stock is topping out? I got to wait till 2020 of January to get the $1.43. If I sell now, I get a whatever the profit is. I don't know, 5 something. I'm sorry, 6 something. So here I get a $6 profit, which is $9,000. Well, it says there $9,400. So I get a $9,000 profit now off the table, no more margin. And then if it pulls back, I'm happy to sell some more. If it pulls back like this, I was never in love with Papa John's pizza. I just saw $40 and said, God, the same thing I'm talking about a Camry. I said, I may not like a Camry. Okay, I drive a Porsche. I don't want to buy a Camry. I've got no desire to buy a Camry. But if you walk up to me and say, here's a brand new Camry for $20,000, and I know I can get 25 for it in 10 seconds from somebody else, and I know it's probably worth 30, I'm going to buy the freaking Camry. And I'll put it because I think, God, I got money to buy it. Why? Because I have cash on the sidelines. When you have cash on the sidelines, you can take advantage of an opportunity. Somebody has to dump a Camry for $20,000. I'm walking around, they say, hey, we got $20,000. By the way, you do some Broadway shows too. If you have cash in New York, if you have cash and you want to see a Broadway show, all you have to do is stand outside the theater right when the show is starting and say, does anyone have a ticket? Because there's always people with tickets. There's always somebody's friend didn't show up and they're sitting there with a worthless ticket in their pocket. So try not to look like a bum also, because obviously they don't want to sit next to you, because whoever sells the ticket has to sit right next to you. But you can go into almost any show like that. As long as you have cash. If you don't have cash, those people don't take credit cards, right? They're just sitting there with a ticket in their hand, and their friend didn't show up. They know they're not going to show up, but they're not the kind of people who scalp. They're not going to sit there on the street corner for ticket, go up ticket. They're not like that. But you shouting to the crowd who's lined up for a brewery show and saying, "Does anyone have a ticket I can buy?" And most of the time, almost all the time, somebody's going to say yes. And all you got to do is whip out the cash and hand them and get a ticket. Boom, done. And not even the full price. I mean, you don't have to give. You can be, you're not going to be a dick about it. You can give them, you don't want to sit there haggling in line. It's not actually legal, but You can always get a good bargain. That's the point, because you've got cash. And the same thing goes for houses. You guys know that if you have cash, if you have $500,000 cash, you will get a much better deal on a house than a person who's got to go finance it. You have an opportunity to sit there and just write a check. A person who's trying to sell their $500,000 home, who gets an offer for $525 from one guy, but he's got to go to the bank and get financing, and you offer them $475, they might take your $475 because you can write a check, say $475, I'll write you a check. Here you go. You don't have to wait 2 weeks. You don't have to wait for the bank. We don't have to go to a closing and bullshit like that. Here's a check. Thank you. We'll do the paperwork. You can get a better price because you've got cash. We have cash on the sideline. So when something goes on sale like this, we can buy it. So I'm not the biggest Papa John pizza fan, but they were having this crisis with the CEO and all that nonsense and scandal, and it went down here. Now here, I thought that was reasonable considering all the turmoil in the company. Here, it got kind of silly, and I said, oh, I'll bet on that. I'll bet on that to resolve itself at some point. It turned around really quickly, but then it went way back as if nothing was wrong. And I said, well, they still got all these problems. So we sell. But buying a stock isn't just about buying a stock low and then sitting on it. You have to say, I know what it's worth, and when it becomes priced higher than it's worth, you've got to say, no, I'm walking away now. And that's the same thing as the move up this morning or this afternoon. It went further than I thought it would. Now it's still higher now, but it doesn't matter. It's my attitude is that's what it's worth. It wasn't worth more than that, so I'm done. I wait for the next thing that looks like a good deal to get into. No comments at all. Are we still on? Funny if I'm talking to myself. What's going on here? I don't know. You guys are just all quiet. All right, fine. I'll just keep blabbing along. Anyway, making such good points that everybody's like, wow, I'm writing this down. All right, anyway, where are we? So it pulled back. That's the bottom line. Here we go. So we cashed out the puts, and that leaves us with the short 50 calls. And now we covered the short 50 calls with 30 of longer term longs. Why did we do that? Because what if it did keep going up? What if something weird happened and again we got blown out? We had the short 50 calls. The stock was at 58. Okay, so that's we had the short 50 calls. We should now back to here. We had the short 50 calls. I didn't want to pay the guy again. I don't think they're worth it. I thought the 50 calls were the right price, so we had them, and those 50 calls at that time. Here. So the short 50 calls were $22,500. I'm not going to pay him $22,500. Screw that guy. Those aren't worth it. So instead of paying him $22,500 to cancel the short calls, we bought a bull call spread at 55.70. So we bought the 55.70 in case it went higher, bull call spread for $19,800. Now, the short 50 calls were 2020. These are 2021. So they're going to depreciate in the premium will depreciate half as fast, the theta decay. So the time premium will go half as fast drawing out. So we'll hold our value longer. Also, the spread is likely, since it has 2 years, it's going to hold its value much better than those short calls. And meanwhile, even if they both went to zero, I'm still going to come out ahead because it's 22.5 for these guys. For the 50 calls. So these are 22.5, and these guys were 19.8. Now, if we're at 50, these are not going to be worth very much. If we're at 50 in a year, these aren't going to be worth too much, but they'll still be worth a few bucks, maybe $2, $3. And that means I'll still recover $6,000 of my 19.8, and the 22.50 that I owed still goes worthless. So we're going to be $6,000 ahead. There's really no downside to this, no downside compared to buying back the calls and closing the position. It's cheaper for me to do this, and there's very few ways I'm likely to lose because I'm over covered. I've got 30 of the longs against 20 of the short 50 calls, and I've got a 1 year advantage. There's very, very few ways I'm going to lose on that position. Now, of course, it worked out perfectly, and it's a home run now. And in fact, let's take a look. The 55-70 spread on PISA. You know, I mean, the goal is for me to get you guys, I want you to think like this. I want you to think about, like, why would I pay that guy so much more money than something is worth? It doesn't make sense. So the 55s are still, wow, that's a big spread. All right, well, let's say 395 is accurate. So they're $4. The 70s are 20, well, 25 seems crazy, huh? All right, let's just split the middle. These are both weird prices, but let's say $4 is right, and let's say $1.50. So we still have $2.50 of value in the spread. So it's still times 30 is $7,500. Meanwhile, the 50 calls have dropped back to 570. All right, so what's happening? So in actual fact, what's happened is our spread, which was 660 and 19.8, is now worth 75. So we lost $12,000 on the spread, basically, on that drop, while the short 50 calls, oh, I'm sorry, they were 22,000. You knew that. They were 22.5. And now they're down to, how many are they? 20? And now they're down to $6, let's see. So now they're down to 12,000. So we gained 10,000 there. So we're basically about even at the moment. But the bottom line is that these guys, these 50s are going to lose the rest of their value much faster than our spread, and we'll come out ahead. And then hopefully we can sell some more calls and make up some more money. But it doesn't matter. We took 47,000 off the table already on this trade. So, you know, we don't overpay. We don't pay. We refuse to pay this guy back more than he's worth. But we can do these moves because we understand what something is really worth. And if I don't get the right price today, I'll get the right price tomorrow. We're going to work on it. And by the way, if I decide to stick with, and again, I haven't seen the earnings, I'm not sure what's going on. They got to resolve some issues, but we got 2 years. But if I decide we want to stick with them, what are we going to do? We're going to sell the puts, and we're going to roll the calls to a lower strike, widen the spread, and then sell more short-term calls, turn it into a regular trade again. You know, sometimes you can take advantage of these things over and over and over again. Starbucks, we closed. We got again right up way up here. I said that's it. Let's be done with it. It's enough. Because yeah, one of my goals in this particular round of the long-term portfolio is to drop, go back to more cash. I wanted to put more cash in. Sorry, where were we? We had $555,000 in cash, and now we've got something like probably $750,000 in cash. We have a lot of cash. Why do we have a lot of cash? Because when the market crashes, it gives us the ability to buy a lot more stuff. So we just bought more Apple. We bought IBM. We're buying some more things. That's what we're adding back when whatever gets cheap. And now we're going to come into, now we're going to have oh my God, that's up 500 now. So now we're coming into January earnings, and we'll see who's still cheap in earnings, but also not just who's cheap, but who's cheap, who has earnings that we think are pretty good. Wow, I mean, the NASDAQ is now up see now here you go, the NASDAQ is 7250 is now up 2.5% or 2.4% really. 7255, I think, would be the 2.5% line for the NASDAQ. So at that point, we're going to expect to see a pullback. And it might have already done that, so let's see. Nope. Wait, no. I'm sorry. It's the wrong Nasdaq. That's why. That's the big Nasdaq. This is the Nasdaq Composite, the Nasdaq 100. Well, here you go. It says 2.5%. So we're at this line right here is 2.5% at 68.82. So basically, this is where we expect it to stop, because a 2.5% move in an index in one day is a very big move. And the Dow is getting to over 2%. The S&P is almost 2%, and the Russell is 2%. So all kind of fizzing out a little bit. And the dollar's down, and the dollar being down 1% from up here. So 97.5 to 96.5 is really is more than a 1% drop. This is probably a 1% drop right here. So we will see. Copper is really flying, huh? Natural gas is coming back again. Look at that, 450 again. That's where we got out. We got out last week at 450. That's it. 450 is where I thought it would settle out. So I'm done with that trade. It went down to 4, but we didn't jump right back in. I was like, if we're going to stay bullish, though, that's what we should expect, is for 4 to start holding up as a firm line. Ooh, look, now there's questions. People woke up. Let's see. Byrne says, can you talk about Fed today? Is this a change in plan interest rates, or does it alter plans? No, I don't see it. I think that this is being very bullishly interpreted, but all Powell is saying is we are getting closer to the low end of the range. That's really what you have to analyze what he actually said without the spin. Oh, I'm sorry. I want to make one more point about the portfolios. So the point was, what is our pattern in playing the market? Okay, when the market goes really high, we add our hedges. Then when the market drops, instead of panicking out of our positions because we have hedges, we take cash that we have on the sidelines. We're well protected with our hedges, and then we start buying more bullish positions, or we add to the bullish positions we already have. Then, if the bullish positions begin to bounce, eventually the profit from the bullish positions becomes a hedge, and we can start to reduce our hedges for the next bounce. Or if it doesn't bounce, if we don't get a strong bounce off the bullish positions, then we're likely at the strong bounce line to add more hedges to cover those gains. So then we end up with a second layer of hedges. Then with the second layer of hedges, now if we keep going up, we take off the first layer of hedges and we leave the second layer of hedges in place. So we're always like leapfrogging back and forth and reshuffling the deck to keep ourselves well covered. But the bottom line is you add positions, add more hedges, you have more hedges, now they pay off, you add more positions, you add more positions, you add more hedges, and the hedges pay off, you add more positions. You're basically forcing yourselves to buy low and sell high. You follow that pattern, and that's what you're doing. Every time the market goes down, you're buying low. Every time the market goes up, you're going to start taking hedges and selling high. That's what you're supposed to do. You don't just sit there and have a stock that went up 30% and go, oh, I can't wait for the next 30%. That's just irrational. It's fine if they're really making 30% more, but you got to look at the stock and say, are we making 30% more than we made last year? Who is it we were just looking at? Where's my thing? PISA. All right, so forget the drama with the CEO and all the other bullshit. Okay, what's the bottom line on these guys? Are they making more money than they did last year or the year before? No. No, no, no. Last year they made $102 million. Now they make this year they're making $45 million. Next year they're going to make $45 million. Sales are not more than last year. Their problems are not just the CEO. This company went drastically the wrong way. They're going to take time to work it out. Why would I be paying them more money than last year? It doesn't make any sense. It's completely irrational. So why should I participate in that? Not only that, though, but this is a $1.6 billion company. Even if it has 100 million in revenues, that's still 16 times earnings for a freaking pizza company. That's a lot of money to pay for a pizza company. This is ridiculous. This is now you're paying 30 times earnings for pizza. That's crazy. And that's after the pullback. Before the pullback, it was much worse. You've got to be realistic about what something is worth. It doesn't matter if you have it. It doesn't matter if you like it. It doesn't matter if you got a great deal. When it's too expensive, it's too expensive. You got to sell it. Anyway, so the Fed. So does this alter plans? It's the same thing. In the Fed, like I was saying in the chat room, we have a range. And the normal range for rates. All right, well, here you go. Wait, look. Fed funds rate. I cannot type on this little keyboard. Fed funds rate history. Images. All right. The current rate, all right, well here, this doesn't go back far enough, but here we are, we're at 2%, or just under 2% or whatever. Oh, here's the Fed funds rate history. So we are here. And in modern history, we are generally here, at least 5%, sometimes 7%. This is like my lifetime. This is my lifetime. I was born in 63. So in my lifetime, have we been below 3.5%? I wouldn't even count that. Once, twice, third time in my lifetime that we've been below 3.5% for the Fed. Is it going to last? Probably not. It never does. You know this is artificial. You know the Fed is artificially pushing rates down. You know that other countries are paying 7, 8, 9, 10%, 20% on their bonds. And it's only fear of those countries going bankrupt or something that keeps people out of them. We're less fearful. We have that advantage right now, but I don't think Trump is going to make people less fearful of having American bonds over time. Our deficits are going completely out of control. This is not going to last. When Powell talks about a normal range, the normal range he's talking about is up here at 4%. He says we're getting to the low end of a normal range. The low end of a normal range is 3.5%. That's 4 hikes from now. Then the range should be 3 to 6, 3. Let's say 3 to 5%. I still think that's way too low. But even if he considers a normal range 3 to 5%. You're still way at the low end you're still way, way below the normal range. And they all know that. And he didn't say anything different. It's just being interpreted that way, that he's saying that we're done raising rates. But meanwhile, they're going to raise rates at the next meeting, and they're going to probably raise rates 4 times next year. And there's nothing has changed. Just the way people are choosing to interpret what he said. Why can't we just make a safe and sound reasonable play like go 100% on a surefire stable investment like Bitcoin? Yeah, there you go. So you can buy Bitcoin at 4,000 right now. That seems like a relative bargain. Please do not misinterpret what I say to be any kind of endorsement of Bitcoin. That's interesting. So Europe doesn't really have an after hours market, but they're still down. I mean, they were flat for the day. Yeah, you can see that. Look, so Europe was down. They've come up a little bit with our markets, but nothing like where you'd think they would be. How's the Nikkei doing? The Nikkei had a nice move up, but still lagging us. Look at that crazy stick on the Dow. That's nuts. All right. And look, there are lots of, like I just did this IBM play. When did we call that out? Anyone remember? Anyway, it doesn't matter. Whatever it was, the concept is IBM. Look at this stuff. So here's IBM, IBM with one M, that one. And they're at 122. And 122 company profile. Here's what how IBM makes money. They've got cognitive solutions, 74% of the company, cloud, 17% of the company, growing fast, financing, blah, blah, blah. They don't really do hardware anymore. Cognitive solutions. Now, Shreefus is saying they're worth 150. I think at least that. I think that the Watson thing is it's because unless you're in a business that uses it, you don't really think about it, but it's really doing well and it's catching on and it's embedding, and they still have no proper competition. And they're not going to, because it just gets smarter and smarter all the time. It learns more and more stuff and gets smarter and smarter. And it just becomes like having a better worker. It's like they're constantly training it to be a better and better worker, and it's exposed to more and more environments and gets asked more and more questions, and it learns which were the correct responses. So the next time someone asks a question, it seems very smart because it answers it exact. You know, like on Jeopardy, the way Watson works is it comes up with a range of answers and figures out the probability that that answer is correct. And if it has a high degree of confidence, so if you say who played Captain Kirk in Star Trek, Watson's going to say William Shatner, 85% likely. Then it would say maybe like what's his face, Picard, whatever his name was. Patrick Stewart. Then it might go Patrick. Its next guess might be Patrick Stewart and have a 25% thing. And given that the disparity for IBM is that it's 85% sure that it's William Shatner and only a 25% chance that it's Patrick Stewart, IBM is going to say the answer is William Shatner. Okay, so boom. But now it gets feedback that that was the correct answer. So now it knows for sure that it was William Shatner. It'll never, ever in the history of Watson have to answer that question again incorrectly. It'll never even think that there's another answer. That thing tells it other things. Like now, because now if you ask Watson who played Captain Picard on Star Trek, it's going to say, I know it wasn't William Shatner because he played Captain Kirk. So it no longer even has him. You understand? Because all Watson is really doing, it's just like Googling. It's like saying, when you say who played Captain Kirk in Star Trek, you'll get, well, here, look. Who played Captain Kirk in Star Wars? I mean, somebody has in Star Wars, that's terrible. In Star Trek. Oh, look, and here's Chris Pine. So you didn't even think about him. He's a new guy. He's playing Captain Kirk. Here's William Shatner comes up, Chris Pine, James Kirk, Chris Pine, Star Trek Kirk, all 5 captains. See, there you go, Jean-Luc Picard. This is what I mean by getting confused. So all Watson is doing is Googling effectively, and it's in its own mind, Googling. And it's finding every association known for Captain Kirk when you ask it a question. And it says, okay, I see this and I see that, but I also see this Picard guy comes up a lot. And this Chris Pine guy is coming up now. So now it's confused when you say who played Captain Kirk in Star Trek. And it doesn't understand the difference between why does it say Patrick Stewart here? Why does it say William Shatner here? It doesn't understand what it's really saying. So it ranks them. But since William Shatner comes up over and over and over again, it's going to first say, I think you mean William Shatner. The second guess would be Chris Pine, which I didn't even think about, but Chris Pine is also Captain Kirk. So we'll probably say William Shatner 85%, Chris Pine 60%, and then Patrick Stewart 25%. And then it would learn that Patrick Stewart is definitely the wrong answer. That would come off the thing. It would then eventually learn by conversation effectively that the computer has that there is an old Captain Kirk and a new Captain Kirk. And then it becomes smarter, right? This is just how kids learn. This is how anybody learns. And the more conversations it has, the more times it answers questions, just like Google, the smarter it gets. And that's why Google, when you ask a question, when you say who played, well, see, now it knows. So now it knows what I want to say. Who played Captain Kirk? Who played Captain Marvel? It's running through what people are generally asking when they ask a question like this. So the advantage of being first and getting the experience and learning from all these different companies that IBM is associating with is tremendous. And it's a moat. It's going to be very, very hard for other companies to catch up. Even if you build a better AI. Okay, so in other words, even if your boss hires someone a little bit smarter than you, but you've got 20 years experience, the fact that they're smarter isn't going to make up for your 20 years of experience anytime soon, right? You're still going to be the more experienced guy that they go to. And even goes to doctors. You can be a Harvard doctor that went to top in his class, blah, 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 blah. And you go to a thing, and the guy who has a degree from the community, the doctor from the local college who got his medical degree in 1940, or 1960 or 70, the guy who's been there for 30 years in the hospital doing the operations, he's the guy to go to because he's done it, he's seen it, he's practiced, so on and so forth. It's going to take a very long time, no matter how good somebody's competition is, to catch up to Watson. And Watson is going to monetize and monetize and monetize and drive IBM's bottom line. And that's why 2 years ago, they started reconfiguring the entire company around, around this division, Cognitive Solutions. People don't even realize that. This is the whole company now. Cognitive Solutions, Watson, and the cloud that connects you to the Cognitive Solutions. Because they know this is going to be the whole thing. The whole ball of wax is going to be Watson. It's going to be artificial intelligence in the future. And IBM created the greatest artificial intelligence unit ever, and they know it. They're not confused. They know what they're doing. But it takes time because they're cutting all their old business lines. They're changing the way they're doing stuff. And they just bought Red Hat, which was actually a great idea. IBM bought Red Hat because they said to their salespeople, what can we do to help you sell? And the IBM sales guy said, we're getting in too late. By the time we get to a customer to try to sell network services, they're already embedded with other crap like Oracle and things like that. And they go, well, what's the problem? They're like, well, Oracle's in there with Red Hat. Oracle's in there and doing this stuff. And they come in right away at the beginning of the transactions. We're not there until much later in the transaction. So IBM's like, well, how do we leapfrog the salespeople to the beginning of the transaction? You go, Red Hat. Red Hat's free. As soon as the company starts messing around with networking and stuff, it's going to probably use Red Hat. Not many people go straight to Microsoft. Red Hat's free. Lots of programmers like Red Hat. They program with Linux, not Red Hat, but they program with Linux. And they'll, you move to Microsoft if you need a more robust environment or so on and so forth. But if IBM's sitting there with their consulting people, and they got their foot in the door in your company, and they know exactly what you're doing and where you're going and what your business is like, they got a way better chance of closing their deals. So it's not about the incredibly low amount of revenue they're getting from Red Hat and the even lower amount of profit they're getting from Red Hat. That's not what they're paying the money for. They're paying the money to have access to, I believe the number was 60% of all people who are networking themselves in the cloud are using Linux. Not the other 30% is Microsoft. There is no IBM OS for the cloud. You're basically either using Linux or you're using Microsoft. And most people use Linux because it's free, or free-ish. You think pay somebody like Red Hat to help you configure it. So that's where the money is. And that's a huge company down the road for the future growth and so on and so forth. So that's why I like IBM down here. All right, so going back to that. So at 120, which is crazy cheap. Oh, wait, let's do one more thing. I don't like to oversell things, but this is our trade of the year, so I want to make sure everybody understands why it's our trade of the year. IBM currently $109 billion. Okay? And what was my bitch about Papa John's? Oh, what are you doing? It was a UK IBM. There's no UK IBM. It's IBM. I only have the American version of this thing. All right, there we go. So $109 billion is the market cap at 122, and they're dropping $12 billion to the bottom line. These are turnaround years. They planned to do this. They spent a lot of money repositioning themselves to the future, and they planned on this. And this year, and they are on track. If you go to Yahoo and you go to IBM, because whenever you see a jump like that, you got to test it. You got to see if that's real. So we go to the financials and we say income statement quarterly. And what are they doing? Look at that. Here's the quarters. They're doing 1.6, 2.4, so that's 3, 4, and another 3 is 7, so they're at 7 billion already, basically. So they're gonna come close to 10 billion. They're not gonna hit the number that's showing there. Here we go. So they're gonna be around 10 billion. I don't see how they're gonna get to 12 billion. That doesn't make any sense. But anyway, so they're on track for at least 10 billion, and it's 109. So the PE is about 11. That's way better than Papa John's Pizza. Okay, and they're doing exactly what they planned on doing, growing exactly like they plan on growing, and they've got something that I believe is going to be huge in the future. In fact, even the most sophisticated robot in Japan are those Pepper robots that SoftBank owns, the little white guys. In fact, I stayed at the what was it? The Waldorf Astoria in Las Vegas. I was just there a couple of weeks ago, and they had a Pepper robot in the lobby, like greeting people and talking to people and helping them. Like if you ask where something is, it'll tell you where it is and blah, blah, blah. It's Watson, though. It's SoftBank gave up. Okay, SoftBank in Japan, with all their access to all their guys and Samsung and everybody else around there, all these great, and Panasonic and all the great Japanese companies, they gave up and they turned over so all the Peppers are now just cloud connected to Watson. They don't have their own brain. They cloud connect to Watson. That's the artificial intelligence that runs those robots. And what happens to Watson? It learns from every Pepper robot all over the world, and there's a lot of them out there. It learns from all these robots how to talk better to people. And every time it learns, every single Pepper robot gets better at talking to people. You know, it's not like they're curing cancer. It's not like overnight it's going to be this thing. It's like they've invented a really smart child, and now they've got to put it into school for a few years. And that's what they're doing. And it's getting smarter and smarter and better and better. And eventually it's going to be an adult with a very high IQ that they can that they can clone 1 billion times and put it to work. That's the whole point of the thing. And does that have value? Of course it does. So anyway, so that's why, you know, I think IBM is very capable. They earn the money now. They're going to make more in the future. They're on a great track. They've got fantastic products. So, you know, the price they're at now is just ridiculous. Anyway, that's why it's trade of the year. So I don't remember what our trade was, frankly, and I'm not feeling like looking it up. But let's say, just to be super safe, you sell the 110 puts for $12. Okay, last sale was $12.15. So let's say you say $12 for the 110 puts. You sell 5 of them. So you're committing to buy 500 shares of IBM for $110. So it's like $55,000. Okay, you're going to collect $6,000 for selling the puts. But you're obligated to buy $55,000 worth of IBM, and if it goes below 110, you're going to lose whatever it is below that times 500 shares. I don't consider that a big risk myself. If you look in Thinkorswim, if you sell these single, and we only sell 5, we'll see what the margin is. Margin is only $6,000. So you're going to collect $6,000, you're going to get $6,000, you're going to have $6,000 in margin. Then, as an upside play, we take the, you can buy the 120 puts, 110. I'd go with the 110s. I would pay $20.50 for the 110s. You could do the 120 puts for like 15 something, but for another $5, I'd rather be in the 110s. So you do the 110 puts for $20.50, and you sell the 110s and you sell the 130s. Now let's say you sell the 135s for $9.50. So 20.50 minus $9.50 is $11. So it's net 11 on the spread. And you collected, so you're doing 10 of these. If you do 10 of those, it's going to be $11,000. And you collected 6,000 here. So your net is $5,000 on the 135 spread. So you have $50,000 worth of spreads, and you spent net $5,000. 5 short 110s and then 10 long 110, 135 spreads. Your net's about $5,000. It has $50,000 potential at 135, and you got a 2-year trade. So the return is massive, of course. You make $45,000 off a $5,000 investment plus $6,000 in margin. Very efficient trade, very nice way to make money. And even since you have 20 longs, you could sell some short calls along the way. If IBM pops a little bit, you can sell a few short calls too. So of course, it's that trade of the year. The return is phenomenal, and the downside is earning IBM at net 120, because you're basically paying $5 per 5,000 contracts. I'm sorry, you're paying $10 per 5,000 contracts if it goes badly. So your net would be about right where it is now, 120. So your worst case is owning IBM at $60,000 worth of IBM. Your best case is making $45,000 at 135. To me, that's like either way, I'm fine. I don't mind owning IBM. I don't mind getting $45,000 for not owning IBM. So that's what I call a good trade, and that's our trade. So that's our trade of the year for next year officially. Okay, 120. Well, it was lower at the time. That's why 120, 145. Okay. For whatever reason, I went that way. If I was doing it now, I'd go with the 110s. Maybe I didn't see it before. So Ken says officially we did the 120, 145 spread with the 120 put. So I think I was a little greedier. I think I went. This is at this point right now. I see a very conservative way to do it instead. But there's nothing wrong with it either way. I mean, look, the concept's the same. Mike says, I know you're bullish on Apple. What do you think of the headwind, like the monopoly lawsuit regarding the App Store? What do you do in general at today's prices? Well, Apple, as I said to the guys in the chat, I said, look, it's like I'm like what's his name? Christopher Walken in the cowbell things. Like I was like, I gotta have more cowbell. I don't care how. Whenever Apple gets cheaper, it's like I want more Apple. And if it goes lower, I want more Apple. If it goes lower than that, I want more Apple. What do you do for the monopoly? They don't have a monopoly. This is a weird kind of thing that they're trying to see. Again, it's basically Bears attacking the company and coming up with ridiculous things like a weird lawsuit. How is it a monopoly to have an app store? It's like going to Walmart and suing them because when you're at Walmart, they only sell stuff from Walmart. It's like that's where you are. You're in the app store. You bought an Apple product and Apple has an app store. Of course it's a monopoly. If you get an Amazon Prime membership, all the stuff comes from Amazon. If you buy an Echo, everything's from Amazon. If you go to a Chrysler dealership, they only sell Chryslers. What I don't understand. What are we trying to say here? But even if they did force them to break up and call it a monopoly and said the App Store was somehow unfair, all they can do is make them spin it off into another company. And so you'll own your Apple shares and you'll have your App Store shares and you'll maybe have your Apple retail store shares. And there'll be a whole bunch of different companies for no particular reason. But the Apple retail store is the most profitable retail store on the planet. I don't mind owning stock in that. I bet you do very well if you got that as a separate stock. They make more money per square foot than any other retail company on earth. And the App Store has no cost. They don't own stuff. They don't need a warehouse. They're like Amazon. They're like Amazon's web services. I mean, it's just a service center for apps. So they're very, very limited costs and tremendous amounts of profit. Another home run kind of business that would have tremendous growth. So he can't hurt Apple, but it's like what do you call those things? Like a hydra, you know, if you cut off the head, two more are going to grow. You can't attack Apple. You can't hurt them by breaking them up. You'll just make more apples, and then you'll be overwhelmed by the things. So I really don't think that's going to help. I don't think it's going to hurt the stock price in general. That's it. The bottom line is Apple. We targeted 184 to get into Apple. It's now probably back to 184. 179, so it's back to 179. This is the low end of the range where we think we're going to be. So at this point, we just buy more Apple, and if you already have Apple, we reposition it to be more bullish on Apple. It was, you know, look, the first time we did a trade of the year, I picked Bank of America because it was like 2011. I think it was November 2011, and my 2012 trade of the year was Bank of America because it was at $5. I was just like, I'm sorry, but Bank of America is not going bankrupt, and they're worth more than $5. I didn't think that was a complicated concept. That was the first trade of the year, and I wish I had it. It was very funny. I remember saying, I'm like, just sell just cash. If you want one simple trade, I said cash your entire portfolio, and just take this one stock and put all your money into it. I mean, it wasn't. I could not make it more emphatic that it was ridiculous. Why? Where is this? Here we are. Okay, yeah. So what are these D's? How do I make those go away? What are all those things? Indicators? No, I don't know what those are. Dividends, right? How do I get rid of that? Events. Don't show me dividends. There we go. Okay. Okay, so here we are in 2012 or 2011. There you go. See, it's like $5. So we had come down. You know, this is after here's the big crash in 2009. So in 2009, it went to $3 or maybe $4 or whatever the hell it was at the lows. They're like $4, $3-4 at the lows. Went back up. Then people we had another like sort of confidence crisis, and Bank of America went down, 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 and it got to $5. And I said, that is the most ridiculous thing I've ever seen. Now we never had a stock of the year before. I mean, frankly, my stock of the year here was Apple because it was $75 at the time, and pre-split. So it was like really what would effectively be $7-8 is where Apple was trading back here. So yeah, that was my stock of the year at the time. I was banging the table all year for that and telling people how insane it was that you could buy Apple for those prices. But we never officially had a stock of the year. The reason we had a stock of the year with Bank of America is because I wrote this whole article in 2011 saying saying this is my stock of the year. So you've got to buy this stock. I said to sell everything you have and buy this stock. You could do the math 100 different ways and look at the thing 100 different ways, and there was no possible way you could say this thing wasn't worth at least $10 or $15. There was no rational reason for this thing to be at $5 back at the time. So we set up an option spread. Of course, it was 2 years out that would pay us off some huge amount of money. It did. It made 500, 600%. And it was the easiest money in the world to make. Anyway, so that began. That was our first trade of the year. In 2012, so the next year we had the one good trade of the year. Then in 2012, now people ask me what's my next trade of the year pick because I apparently became good at it. So here we are in 2012, and I said, what's the best bargain in stocks at the time? I said Apple. And we had a rough time, but then we recovered and whatever. Now in 2013, people said, what's your trade of the year? I said Apple again. Now don't forget, we had 2-year trades, so it wasn't like we needed it to perform here. It went down and went up, and when it went down, we bought more Apple because it was stupid. I said when Apple was at 70, whatever the hell it was, when Apple was at 75-ish again, or 75 post-split, even though that's up 10 times from where it was pre-split, I said, this is a stupid price. This is stupidly low. There's no reason for it to be down here. It should be at least $100. So it was a stock of the year, but we didn't play it to be a year. We played it for a 2-year trade to be $100. We hit it basically on the nose. So now, a year later, it was still too low. And I said Apple is once again our trade of the year. So it was our 2012, 2013. In 2012 was 2013 trade of the year. In 2000, it became the 2014 trade of the year. And again, in November of 2014, it was our 2015 trade of the year because it was still too low. And then I said 100 is too low. I said, okay, we're at 100, but it's 2 years later, we should be up at 120. So we made that the trade of the year again. And the point of the trade of the year is a stock that I feel is absolutely worth the money, basically. After that, after Apple, I think it was, then it was UN, then it was natural gas, UNG. Which was a very late bloomer, but obviously doing well now. It took a while to get going, but it's been very rewarding since. So then it was UNG, then it was Silver Wheaton last year. Now they're Wheaton Precious Metals, WPM. And then we're into Wheaton Precious Metals, which is basically, we had a nice pop. We actually cashed out here. We did, we did what we wanted to do up here, but we got back into it again, so we're back in it. But basically, this is where we buy around 18, and when it goes up again, we sell. But right now, they're still low in the channel and still a buy right here. And then now I'm taking IBM. But basically, we've never had a trade of the year that hasn't paid us what we thought we'd get. And I'm sorry, I think Wheaton was here. Am I missing? What was that? Oh, that's right, because Wheaton Precious Metals, that makes more sense. Wheaton Precious Metals was here, and it popped up to here, and we got out, and then it went back down, and now we're back in. But that was when it popped through. Again, it went to a ridiculous price. It was too high, higher than we thought it would go. So we got out. Then we got back in again when it came back down. Now we're just waiting for the next cycle to pop up. I'm sorry, then it was LB, but officially it was really LB. But then what happened is LB wasn't cheap by the time you got to Thanksgiving. It already popped. See, LB popped over here. No, that's not the right year. Here. So what happened is by the time it was time to make my official pick, so in September I called LB to start the trade of the year. We picked it up here. But by the time I had to make my official call on Thanksgiving, it had already taken off like crazy. We were ready to sell our positions, and we sold. And HBI, Haynes, did not move, and I like Haynes also. So although LB was really our trade of the year as far as like what I wanted to do, the fact is I'm kind of stuck announcing them in November on Thanksgiving. So at the time in Thanksgiving on November, Haynes hadn't moved much, so we picked that up. That also popped. We got out of the first batch, and now we're in it again. So there's another one still cheap. Anyways, those are our trades of the year. But we pick things that we think are like way too low and are likely to go higher. And IBM is now in that position. Doesn't mean it won't have some pain ahead. Doesn't mean it's never going to go down or anything like that. But it does mean that I like it enough where I'll buy some now. And if it goes lower, I'll buy some more. And if it goes lower, I'll buy some more. So great, and again, there's great opportunities. In fact, right now, LB, HBI, still great opportunities. Wheaton Precious Metal, great opportunity again. Whenever you get low in a cycle, there's a lot of things you can pick up and a lot of old favorites. There's nothing wrong with their business. They're still great brands. And that's why it doesn't make sense to sit there and sit on a winner. It's like, you go get a new trade. There's going to be other things. Look around. That's why we have a watch list. You can always refer back to the watch list. Where's that watch list? See the watch list update? That's from November of last year. And it says, it's very important to have a watch list, see? And these are stocks that we have on our watch list. GE got cheap. Probably a lot of things are cheap now. Okay. So CIM is on our watch list. That's taken off recently. Ford up and down, was nice and low and came back a bit. GCI hovering up and down. Gilead also back in the low end of the range, good to pick up. H&R Block has taken off. LB, as I said, we like that. Macy's was really low and went up, and now we still like it, though we talked about that today. NLY always hovers around here. They pay off a huge amount of dividends, so that's what you're in that one for. PSA, weird kind of movement. We had gone out here when it popped up, and now we got back in recently. SKT, I like these guys. They're a mall REIT. They're the best mall REIT out there, but steady, basically steady kind of movement going up. Target was ridiculously low. Now it's ridiculously low again. Oh, that's it. Huh. I guess this was not a full post. That's not a full watch list, but anyway, it gives you an idea. So you should always have a watch list, so you can always refer back and say, well, who's cheap? Who did we like that's cheap? And has anything changed since then? And if nothing has changed since then, and now they're cheap again, then why wouldn't you jump back in? But the same goes for getting out of stocks that have run their course. When a stock becomes much more expensive than you got in, and it's no longer valid, and you no longer have that huge upside, then why are you still in it? Find something with a better upside. Go for something new. You know, you're not marrying these stocks, you're just investing in them. JC says with Apple, oh no, we talked about that. Oh no, I'm sorry. JC says with Apple, what about Trump's declaration he might impose tariffs on iPhones assembled in China? Is it posturing? Is he crazy enough to do it? He is crazy enough. He's crazy enough to do it. He's crazy enough to nuke us all. I'm very worried about Trump. But how much is it really going to hurt Apple? And not only that, though, but it's illegal. I mean, there's still a law, and who knows? I don't know how psychotic the Supreme Court is now. Are these judges going to throw away all sort of veneer of having any sort of jurisprudence of being any kind of real judges and just do whatever Trump says? I don't think so. Historically, that really hasn't worked out for presidents. There's been many presidents who packed the court before, and the judges have tended to keep a generally independent streak. I mean, and I'm not saying that the last idiot's going to be like that. I thought his name right, Kavanaugh. So Kavanaugh seems like the kind of guy who would throw out all morals and just do whatever Trump wants. But most of the judges there, even the conservative ones, they're real judges. And you don't get to that kind of position without really loving the law and caring about the law. And don't forget these guys, they went to law school in college. And they were generally went to college in the 60s and probably the 50s, 60s. They had this American idealism drilled into them. They're not like Kavanaugh. They're not like punks who went to college and skated through the thing or whatever, and then got appointed because their mother's a judge, and so they became a judge. You know, that's not normal. Most of the judges are very serious, well-respected judges, and I don't think they're that likely to sort of just run ramshot over the Constitution and just sort of just say, well, oh, yeah, sure, you can individually target Trump. If you don't like a company, you can just tax them. You can't do that. It's illegal. It's illegal on the international courts. Apple can take them to international court. You can take them to the federal court, to the Supreme Court, and Apple has the money, and they got the lawyers, and they'll make a fool out of him. It would be a very poorly advised thing to do. He can talk about it all he wants, but, he doesn't always get his way, as much as you think he might, as much as he wants to. Trump doesn't always get what he wants. Can Trump target everything out of China in order just to get Apple? Sure, he could do that too. But it's not, even if he does it, is that going to stop people from buying an iPhone? They already cost a ridiculous amount of money. I just bought a new iPad. Oh, is it great? Oh, I'm so happy. I just walked over, I don't know, I think it was $1,300 for my new iPad. I didn't get the biggest one because I didn't see. My old iPad was 128 meg. It's 3 years old. My old iPad was 3 years old. It cracked. That's why I didn't buy it just because I wanted a new one. I bought it because my screen cracked. And I just was waiting for the new iPad to come out until I got a new one. I didn't want to get a new one My screen cracked like 6 months ago, and I've been dealing with it. I tell you, like it's one line that goes all the way across the side of the screen, but it impacts the touch sensitivity a little bit, so it's kind of annoying. But I'm not because I'm super cheap, but I didn't see the point in going to get a new iPad until the new models came out. So the new models finally came out, and last week I went. In fact, on Black Friday, I went to the mall and got myself an iPad. But anyway, so mine was 128K and 128 gig. Let's see how old I am. Talking Ks. Mine was 128 gig, and I got a 256 gig because they don't make a 128 gig anymore. Because I was only using half my 128 gig. So I mean, after 3 years, I've only used up half of my 128 gig. What do I need with the 256? But I got the 256. It was about $1,300. And it's way. I mean, well, it's a 3-year model difference. I mean, mine was the original iPad Plus, and I bought it almost exactly 3 years ago. And this one is so much faster, and it just you can tell, and the sound quality is better, and it's nicer. It's got a better screen, so on and so forth. It's for a guy who loves his iPad, it's like a nice improvement. It's not a major improvement. It's like having it's like having an old version of a car and getting a new version of the car. It's like you might you generally like all the stuff that's new better and has better features. So anyway, but the bottom line is whether it was $1,300, if it was $1,410 because that 10% tariff stuff on it, that really wouldn't have changed my buying decision. I wouldn't have gone, oh no, now I'm going to go get an Android, or something like that. When you're in that category and you're buying for those things, it's not the same. So Mike says, I got called away from the computer just to recap the trade of the redo Cell5. It's not a redo. I mean, there's many ways you can get into IBM, but yeah, Cell5 of the 2021, right? 110 puts for, I believe it was $12, and buy these spreads, the 110, 135 bull call spreads, and I believe the net price on those was like, well, let me just see what it was. I think it was like $6. No, it wasn't $6. Silly me. It was like $11. That was the point. The 110s are $20.50, and the 135s are $9.50. So that's $20.50 minus $9.50 is 11, right? So it's $11. So these would be $11,000 for 10. And that one is $6,000 for selling 5, and so your net is 11,000 minus 6,000 is $5,000. Your net is $5,000 on. I'm sorry, it's on a $50,000 spread. I got mixed up on the number. It's on a $25,000 spread. You're paying $5,000 net dollars. So your upside is 20,000 profit upside at 135, not 50. I don't know where we got that mixed up before. It wasn't 20 long. It was 10 long. You could sell 10. Either way, the math would be different. 10, 12 minus 22. Nope. Either way, you're going to have either way, it's the same ratio. So if you do 2 to 1, so you buy twice as many bull call spreads as you do the put spreads, your upside is going to be 4 times what you pay. So you'll get back, if you put in 5, you get back 25 basically. Oh, you know what? That's probably why I picked the other one, because the other one had a better upside, like a high. I think it was like more like 1,000% upside doing it the other way. So I was being a little bit more aggressive. But I like the conservative play. So the one we just talked about is a more conservative way to play it. Not much more conservative, $10 more conservative, and I think it's like a higher likelihood to pay off, and you've got a pretty good payoff anyway. So it's a perfectly good play. Jim says, judges avoided trouble. Hopefully, morons than most will never forget they're just people. Yeah, they're just people, but, I mean, I know a lot of guys who are lawyers, and I know a lot of sleazy lawyers, but they still, work within the law. They still think the law is important, and if there's a loophole, there's a loophole, but if there's not a loophole, They're not going to just like ignore the law. And well, also though, because they can't, because there's judges above them and so on and so forth. But I just don't see how people become, I don't see how you go from being a lawyer to being a judge to going to the Supreme Court, and now you're going to say, you know what, I'm going to be a cartoon. I'm going to just like, whatever the president says, I'm going to ignore the Constitution and make up bullshit. And what's his face was like that though. The conservative judge that died, whatever his name was, gone, forgotten already. But that horrible, horrible man, whatever his name was. The one that went hunting with Cheney. He's a Supreme Court judge. He's going hunting with the vice president. I mean, that's a problem right there. You shouldn't be sucking up. You don't socialize with the freaking rest of the executive branch. That's just, you should be separate. Scalia, that was him. Scalia. What a horrible person. But that's your sellout judge. And the problem is, Roberts, who's on the court, with a conservative appointment. He's not conservative enough. He's a straight up good judge. And Scalia, yep, that's right. Who gets surprised? Sandra knew it. But Scalia is what I believe. I forget his name now. I forgot his name again. The new guy. I cannot keep all of Kavanaugh. So Kavanaugh is in theory more like Scalia. He's just a political tool. He could care less what the law is. He's going to write any kind of bullshit he can to justify taking conservative stances on cases. And Scalia was a brilliant judge, brilliant jurist, knew all about the law, but he just perverted it to match his viewpoint. Didn't he? Just used the law. He used his knowledge of the law to make stuff up. And that's what they want. That's what all the conservatives want. They want a guy who's willing. But the problem is there aren't many guys as smart as Scalia who are also psychotic conservatives. Kavanaugh is a psychotic conservative, but nowhere near as smart as Scalia. So unlike Scalia, he will not have the respect of the other judges. You could hate Scalia. But like Ruth Bader Ginsburg and O'Connor, they liked talking to him. They liked arguing with him. They didn't have contempt for his positions and views. I don't see Kavanaugh being in the same boat. I think everyone's looking at Kavanaugh like, you are not deserving of this office. You're not a guy that should be here in the first place. And we'll see. We'll see what happens. And Thomas isn't much better. Clarence Thomas is another push-through appointment who probably shouldn't be on the bench. But he's smart. He doesn't say a word. Clarence Thomas is now famous for never talking. When they, the way the Supreme Court works is that all the judges sit there, you're in front of the 9 judges, you make your case and they ask questions. Just while you're talking, they ask questions. You're not arguing with the jury, you're arguing with the 9 judges. And you make your points and they bring up a point and they ask you a question, the lawyer has to answer the question. It's a back and forth kind of thing. It's not like a regular trial. And Clarence Thomas has maybe, like in 20 years has said like 5 things in the Supreme Court. So he keeps a really low profile. He knows he's just lucky to be there. The other judges do all the talking. Scalia was not. Scalia's the guy who controlled the room, basically. I don't see Kavanaugh being that guy. I think Kavanaugh's going to, if Kavanaugh's smart, he's going to shut up, but I don't think he's smart. I think he's going to talk, and I think he's going to piss the other judges off. But we'll see. Anyway, so I don't think Trump's going to get ramshot. I think the evidence against Trump that's going to come out is going to basically, nothing's going to happen. Nothing he says from now on is going to matter. Trump's having his last 30, 45 days of freedom before the Democrats come into the Congress and start having the power to actually say, what is this? What do you do here? And what do you do there? And what's going on here? Right now, nobody does that. There's no oversight at all of what he's doing. And he's doing a lot of weird stuff that should be questioned. And I'm not saying they're going to politically assassinate him. I mean, fortunately, unfortunately, the Democrats aren't like that. They don't do that. They don't come in and suddenly start, investigating everything. They're not assholes. They're not assholes like the Republicans. And the funny thing is, not one person in 8 years, not one person in the Obama administration was indicted for anything, not even Hillary. I know you would think that Hillary Clinton must have been indicted for something because she spent 3 to 4 years testifying before Congress about every single thing that ever happened in her life. And that's after her and Bill Clinton used to testify about everything that happened in their life up to that point, back 20 years ago. You know, the Whitewater and everything else. So when Clinton was in office, Bill Clinton, they used to investigate Bill and Hillary on a daily basis. There was scandal after scandal. A Travelgate, remember Travelgate scandal, because Hillary booked travel not through the White House or whatever it was she did. And then, but then when she's Secretary of State, we got the big guys, we got the phone, we got this, we got that, we got that. There never, ever was any indictments, ever. Trump administration, 27 indictments. Well, he broke the Watergate record already, and they're not even done. They're only in the beginning of the investigation. I remember Watergate. Most of you guys, I think a lot of you guys must remember Watergate, but I remember Watergate. And it took years and years and years to play out. It wasn't a quick thing. Trump's only been in office just over 18 months. This is just getting started, okay? They're just finding out what he did. And they're just putting the pieces together. And then still, he's the president of the United States. You got to build a really, really solid case before you jump out and charge him officially with doing something. So until they're done with all the interviews and checking all the stuff, nobody's going to, he's going to act like he's a free man, which is what Nixon did. Nixon, a year plus after Watergate, Nixon made his "I am not a crook" speech. He was a crook. Doesn't stop him from saying "I'm not a crook," because the only time you get to say something like that is before you get the indictments officially. Below Nixon, people were getting indicted, but Nixon wasn't indicted yet. Nobody specifically hit Nixon up with indictments because you've got to wait until you're positive. You can't do that and be wrong. You've got to have an absolute ironclad evidence, and that's what happened to Nixon. They had absolute ironclad evidence that he did it, he committed crimes, he ordered the break-ins, he did the cover-up. It was him directly doing that stuff, violating the Constitution, and he got in huge trouble for that. Trump, way worse. But they're just not up to the part where they prove it yet. But that's why you can't take anything that Trump does seriously, and that's why I really don't think, more importantly, that's why I don't think we're going to have a trade deal with China. Because China's not stupid. Why should they make any concessions to this guy when he's not even going to be in power for very long? And even if he doesn't get indicted, even if Mueller goes, hey, you know what, this Trump guy's pretty good guy. It turns out he didn't do nothing wrong. Even if that happens, he still has an incredibly angry Congress to deal with. And nothing that he tries to do is going to stick. And not out of spite. He can't just start making rules up and attacking China. He can't just ignore the World Trade Organization rules. He's putting tariffs on China unilaterally without the approval of Congress, under the heading of it being national security. And the thing is, nobody in Congress, not the House or the Senate, has convened any kind of hearing to say, is this really in our national security? Is there really something that China is doing that's violating our national security to cause you to put tariffs on them without having a vote? As soon as they have that meeting, the tariffs are gone. It's just that the Republican House and the Republican Senate has never actually said, excuse me, but we haven't actually voted on this. They don't care. But now you've got a Democratic Congress and they're going to care. So how is Trump in a good negotiating stance when he's going to sit down with China and Xi, China's president? He knows that he has 1,000,000% backing from his party and that anything he says is law and will be followed through on. But the guy he's sitting across the table from is barely hanging on to his job. And he's violating his own country's law in making these tariffs in the first place. So what's he going to cower to Trump? That's what Trump thinks is going to happen. He thinks that Xi is going to go there and beg for mercy because Trump has somehow damaged his industry. He hasn't damaged China's industries any more than he's damaged ours. We're the ones closing plants. We're the ones shutting business down. We're the ones with farmers who have crops rotting in the fields. We are not in a position of strength. We're only in the position of strength in the mind of a delusional leader who refuses to see the damage he's causing to his own people. China has been running around the world making trade deals with every other country but us. They're moving on. They're ready to leave us in the dirt and say, okay, we're just not going to trade with you anymore. Goodbye. Have a good day. And by the way, and don't forget also another thing that people don't understand, China's not paying this tax. A tariff isn't a tax on China. A tariff is a tax on the American people who buy Chinese goods. You're punishing your own people for buying things that are made in China. The idea is that they're supposed to hopefully buy things that are made in America, but what at the dollar store is made in America? What is your choice at the dollar store? What American goods are there? Are you going to go to the $2 store to buy American goods? Could you even go to the $2 store to go to the, what do they call it? Five Below. There's a store called Five Below. It's a $5 store instead of a $1 store. My kids love that place. Everything in there is $5 or less. And it's a good chain too. They're doing very well. So you go to the $5 store. How many things are made in America? At the $5 store, that is 5 times more than the dollar store. That's how far behind we are in competing with China. We can't even get things down to $5. They're down at $1 for this stuff. So who are you punishing? A person who makes $8 an hour, 40 hours a week is taking home $200 a week. And that's $800 a month. And that's $9,600 a year. They're paying some kind of rent. They got to eat. They got to buy health care. They're supposed to save up for their kids' college. I mean, you realize how ridiculous that is, right? That minimum wage is it's completely insane. It's not even a realistic thing. $9,600 a year total to live on. And you think they're going to buy American? You think you think it's an option for them to say, oh, I'm going to buy American goods because there's a 25, because it's $1.25 at the dollar store now, and so instead I'm going to buy $10 American items? This is not going to happen. These are empty threats made by somebody who doesn't understand economics. And China is ready to move on. We're not ready to move on. We can't move on. If China stops selling that shit and all these people who are poor, who mostly support Trump, suddenly have no choices. There's no more dollar store, and everything now they have to go to regular stores to buy. They're going to be hurting badly. You know, it's not a war we can win. It's not the way trade works. You have to figure out how to make something in America that costs $1 that people want to buy, not to stop China from selling things that cost $1. And they talk about labor, by the way, and how it's cheaper labor in China. That's because in China you can actually live on $2,000 a year. The thing is, the real dirty secret of this whole thing is China. And not a good living wage, but China pays people more of a living wage than we do. Just because it's less doesn't mean that they're getting less. The people who have a job where they can afford to live in an apartment and eat and wear clothes and go out and whatever, who has a better lifestyle, an American worker or a Chinese worker at the poor levels? It's honestly, the Chinese workers have better lives at those levels. What we're doing in this country to our poor people, and the lack of insurance and lack of health care and the lack of a safety net and the lack of food stamps and everything else, they can't live. And it's going to cause a problem one day. Maybe not today, maybe not tomorrow, but eventually it's going to blow up. Anyway, Tom says, if you have time, give you your thoughts on shorting the futures premium. I wouldn't, you know, again, we're in a range. Where am I? That's the point of these boxes. They don't look like boxes, I guess. Yeah, I used to do them in a little chart, in a little spreadsheet, but now I just roll them out. But if you imagine they're in boxes, well, you have to imagine. I mean, Jean-Luc does here. This is what I used to do. But these are not the temporary; these are the longer-term numbers. But it's the same concept. It's just a spreadsheet. And what we're saying is, if we're in this range here, you're right in the middle of the range we expect. This is the range that we expect even in a weak market. So I'm not bullish or bearish at this level. I was bullish this morning, and I said we want to play above 1500 for you see 1485. Above 1500, I wanted to play for the bounce. And at 1520, I said let's get out. And now we're at 15. We're almost at 1530, but 1530 is officially the weak bounce line. That's what we're looking for. We're looking for 1530. We're looking for 7080, 2710, 248. So we're over 24.8 on the Dow. Don't forget the Fed minutes tomorrow. The Fed minutes are going to say something different than what the meeting says. 24.8, 27.30 was it? I forgot. 27.10. So we're well over 27.10. We're way below here though. So we're just sort of like oozing around the middle of the range in this general area. And we don't know which way it's going to go. It could go up, it could go down. I don't have a strong feeling, although I do think it's valid to say, yeah, maybe take the one that's the highest up, which is the NASDAQ. But here's the thing: who's got the biggest bounce so far? No, it's not the NASDAQ. I'm sorry, the NASDAQ has not got the biggest bounce. The biggest bounce, the one who's over, is the Dow is getting close to here, 25. If I close the other one, I won't keep doing that. Hang on, close that. All right, now it should work. So the Dow's at 25.3. All right, and 25.3 is a strong bounce line. So yeah, if I was going to play, I'd play the Dow to be rejected. But it's a little scary because, like I said, Apple still has a lot of room to pop. But I would play the Dow to be rejected at 25.3, at least to be slightly rejected, just based on the fact that it's a strong bounce line. So it'll bounce to 25.3. If it gets weakly rejected. Now, what does weakly rejected mean? Well, it bounced from 24.3 to 25.3 is obviously 1,000 points. So if it's weakly, a rejection there would be 20% of 1,000 points, would be 200 points. So if it goes back to 25.1, that's a weak rejection, which means it's probably still strong. If it goes back to 24.9, another 200 points down, that's a strong rejection, and then you want to see if that fails. And if it fails, you're going to be back around here at the weak bounce line. Then the weak bounce line has to hold, or you're back into a danger zone for all the indexes. So that's what we're going to be watching now. Does the Dow clear 25.3? As long as the Dow is below 25.3, and it's right below it now at 25.280, then yes, I do like. I think a short is good here because I also look at that. Look at where it got rejected, 309. So we expect a pullback of 200 points here. So yeah, that's a fun play for a pullback because you're not going to risk very much if it goes over. Obviously, if you go in now, you'd say, okay, let's say 315, I get out. So you're going to lose $75. But if it pulls back, you're going to make 1,000. So it's not a bad play with stops because I think this is an overreaction. And also tomorrow you get the Fed minutes, but not until 2 p.m. But you'll get the Fed minutes. Now the danger is, of course, so like I said, Europe hasn't really reacted yet to our gains. Asia hasn't reacted at all to our gains yet. You still have a lot of people who are going to wake up and start trying to catch up and buy our indexes. So we could pop a bit higher than we are now in pre-market tomorrow, and then maybe don't even come back down until somebody reaches the Fed minutes. All right, so we'll see about that in the chat room tomorrow. That'll be the exciting thing to play tomorrow. I wouldn't bet, frankly, though. If I had the time to sit and watch it all night long, maybe I'd make a short bet, but I don't, so I won't. And I wouldn't play this. But tomorrow, if we're up at some silly level because Europe and Asia wake up and try to follow through on our play, then it's going to be an interesting short. So look for me to make a call tomorrow in case it's a good short tomorrow. But right now it's too iffy because again, we're making this move while everyone else is sleeping. And as soon as Asia starts waking up, they're going to go, oh my God, look at the Dow, we're missing the rally, blah, 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 and they'll start buying. Or they'll get squeezed, or the shorts will get squeezed also. So we're not there yet. This is a very big move. And until the Fed minutes tomorrow, there's probably not going to be a reinterpretation of what Powell said. All right, so that's the big move today. Sorry, there's no exciting futures action to bet on. Wow, look at gasoline came back down, oil came back down. This is economically, these are very weak, bad signs. So it's a very mixed thing, and I think this is just all based on Fed speculation that doesn't have a very solid premise. So yeah, if you want to sit around and short it, I'm all for that, but I'm going to wait until tomorrow and see where we are. All right, that's going to be it, folks. Losing my voice, so it's a good time to cut it. So everybody have a good day, and we'll pick this up tomorrow in the chat room, okay? Talk to you later.